After a correction for the last few months of 2021, U.S. natural gas prices are off to their best start ever in 2022. An enormous rally here in natural gas, but I think that the bull market in natural gas is just starting for a number of different fundamental reasons. So natural gas demand will continue to grow globally because of electricity demand. Natural gas is the cleanest burning of all the fossil fuels, and in many countries outside the United States, a lot of oil and natural gas drilling has been banned or heavily restricted. So there is a big profit potential for American firms or firms with large energy interests here in the US to set up LNG or liquefied natural gas facilities to export natural gas prices, which are rallying here in the US, but they are much, much higher in Japan. They are much, much higher in Germany. They are much, much higher in the European Union. They are much, much higher in the United Kingdom, and they are much, much higher in China. Natural gas prices in the European Union, at one point, I think it's corrected a little bit recently, but at one point they were 5 times higher than in the US. And there are severe electricity shortages throughout the United Kingdom and the European Union right now because the politicians in those countries, and I've talked about this at length for months now, the energy policies across the board, especially because these ESG policies are so corrupt and wasteful. They're not about actually finding cheaper energy. There are problems with all forms of energy. There is no perfect form of energy. There are problems with all forms of energy, even wind and solar. The wind turbines, there's enormous problems with those. They're made with rare earth metals. There's problems sourcing rare earth metals as the air, water, and soil in China, and then rare earth separation, and the value chain for rare earths is very, very toxic to separate them, and a lot of companies cannot do that. And then solar panels don't last very long, and those also use rare earths. So there's just problems across the board with all these different forms of energy. There is no perfect form of energy. But I put charts there on your screen. Chevron stock, and I was writing articles about this for patrons, and my patrons at the time were not happy. They were like, Chevron's boring. It's not a good company anymore. This was in early to mid 2020. I was writing a number of different articles about Chevron, talking about the future of natural gas. Chevron has been making big investments in natural gas, and Chevron stock is close to an all-time high right now. It's up enormously over the last 20 or so months. While oil prices are doing pretty good, oil prices are not at triple digits, but natural gas prices here in the US have been rallying, as you can see there with the US natural gas chart on your screen. US natural gas prices bottomed in early 2020 as a ton of extra natural gas supply. They were flaring it at the shale oil and gas wells in Texas, Oklahoma, North Dakota. They were just flaring off all the extra natural gas because they did not have any place to store it. So almost all of that extra supply came offline, and it was very, very predictable that we were going to need more natural gas supply. So I was seeing all that supply come offline, and it was obvious that a lot of these other governments, with the policy that these politicians, bureaucrats, regulators were talking about going more green, ESG, forcing more people to buy electric vehicles, that if people plugged in their electric vehicles, that natural gas was going to be one of the main sources of power for electricity generation. And a lot of governments have not switched over nearly enough to natural gas usage yet, not nearly enough, especially China. So you are going to see a lot of governments in the decades to come increase their natural gas demand for electricity generation. The compound annual growth rate for natural gas electricity demand is going to be very, very strong, especially compared to a lot of these other energy sources. And I've already talked about in videos recently that nuclear power and natural gas, in my opinion, will be the two main sources of baseload electricity generation. Wind and solar cannot handle baseload. Geothermal, advanced biofuels, we're nowhere near next generation nuclear power. So regular natural gas powered electricity generation, and then also the normal nuclear power plants that we have now, are the two safest forms of baseload electricity generation, unless politicians, bureaucrats, and regulators decide we're not going to be able to use electricity. There's arbitrage here that these companies are doing, and this is a long-term arbitrage by these oil and natural gas companies. If you have cheaper natural gas here in the US, you are wasting energy. The energy returned on energy invested is not great. However, it is economic. You can make a big profit by taking cheaper natural gas available here in the United States and turning it into liquefied natural gas and exporting it to countries that will pay a lot more. This has been the case with exporting liquefied natural gas to Japan for many years, but you're going to see a lot more countries start to import natural gas in the years to come. Finally, if you like content like this, I want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there are now over 190 articles and audio podcasts behind my paywall over on my Patreon, all for the cost of only $5 a month. I think it is one of the best deals out there. And just in the last month or so, there are now 7 new audio podcasts out and an article about a Gold Royalty Jr. I think they have a tier 1 asset. If the shares crash, they will be a potential takeover target. Right now on the valuation, I don't think that Gold Royalty Jr., the valuation is attractive yet. So we are waiting to see what happens with that. But I think it's going to be a very interesting time in the near future for gold and silver investors. Gold prices and natural gas prices are actually showing very good relative strength lately. Some of the other commodities are also showing very good relative strength, despite what is happening in China. Seeing bad news every day out of China, and yet commodity prices, most commodity prices anyways, are actually holding up pretty well. And again, just in the last 26 or so weeks, there are now 39 new articles and audio podcasts out for patrons, all for only $5 a month. It's probably one of the best deals out there in the investor education and research space. So if I could wrap up this short little video very quickly, natural gas prices did not look too strong the last couple months, 3 or 4 months of 2021. 2022 is a different story. 2022 so far has been gangbusters for US natural gas prices. We are seeing news headlines of natural gas shortages, of electricity shortages in the United Kingdom, in the European Union. Natural gas is not only used for electricity generation, it's also used in natural gas liquids for a lot of plastics. It's used for fertilizer. It's used in a lot of things. Actually, these days, natural gas is used. It's been used as a replacement or a substitute. Natural gas and natural gas liquids have been used even more than oil has over the last 15 or 20 years. The switch over by a lot of companies using petroleum products or plastics, they've switched a lot of stuff over to natural gas liquids and natural gas. So natural gas has actually been switched over. The demand side of natural gas is very, very strong, especially for electricity and power generation. If politicians, bureaucrats, and regulators force people to switch over to electric vehicles, that means more people using even more electricity, and that should benefit natural gas in the long run. Also, I think a lot of these coal-fired power plants in China in the next 5, 10, 15, 20 years, a lot of them will be switched over to natural gas. Or finally, China will, in a post-Fukushima era, start to build even more nuclear power plants. I know a lot of them were delayed after Fukushima. They were put on hold for a very, very long time. It seems like well over a decade they were delayed since Fukushima. So that's why I am bullish long term. I believe there are major bull markets for both uranium, nuclear power, and then also for natural gas. I am more bullish on natural gas than I am on oil because governments do not have a strategic natural gas reserve that they could dump onto the market like they can with oil to temporarily manipulate the natural gas price. Also, a lot of the holders of natural gas, so these national oil companies, are not investing in replacing reserves or growing production with both oil and natural gas. So I think now that so much of the US shale oil natural gas byproduct that was uneconomic, that was being flared off, is offline, natural gas's bull market is just restarting, and there are big arbitrage opportunities for companies like Chevron, Royal Dutch Shell, Cheniere Energy, those companies I've talked about in the past for patrons. I may do an audio podcast in the next couple weeks and talk about a junior liquefied natural gas company that is building massive export facilities in Texas. They already have long-term contracts with some utility companies and oil and energy companies, large ones, to do export deals, but they're building their facility now, although it is speculative because they're not generating cash flow yet and their facilities are still under construction. But I think the future is very, very bright for U.S. firms, for natural gas, and also for liquefied natural gas, now that so much of that uneconomic and wasteful shale gas byproduct is offline. And these ESG, I get asked questions about ESG all the time. ESG are not good long-term investments unless you want to bet on waste, fraud, corruption, and abuse, or you want to bet on a pump and dump of an ESG stock from a Vancouver stock promoter that got paid under the table 6 to 8 figures to help move the stock and then dump it later onto retail shareholders who end up being bag holders in the near future. But the arbitrage I'm talking about, though, is taking relatively cheaper natural gas here in the United States, turning it into liquefied natural gas, and then exporting it and selling it at a higher price to oil and natural gas companies outside the United States, in Europe or Asia, or utility companies in the United Kingdom, Europe, or Asia. That seems to be a very, very profitable business going forward.